All right. So today is Monday, March the 4th here, about 11:40 a.m. Mountain Standard Time. Markets close here at 2 p.m. Mountain Standard Time. So got a little over 2 hours, 2 hours and 20 minutes or so before the close. And I just wanted to record sort of an A to Z approach on a high probability, fairly high risk, so high probability of success, but also high risk if it doesn't. Credit strangle around earnings on a volatility crush trade. And we're doing it on this CRM right here. So CRM is Salesforce. Salesforce is reporting their earnings here. You can see it's already entering a pretty volatile phase there. You see the big drawdown that it has had today. It is a volatile stock just by its very nature. And then, of course, today you'll see that next earnings results, 3/4/2019 after market close. So that is today at 2 p.m., probably 2:15 or so, I would think 15 minutes or so after the market's closed. We'll get earnings reports, the last quarterly earnings results for Salesforce. And there's a lot of volatility baked into that. If you go look at the front options right here, these March 8th, they expire in 4 days, but we really only need them for today and tomorrow. If we come look at the ones that are closest to at the money, 158, that'd be the 157.50s here. If you look at the implied volatility, it's high. It's 83% on both the puts and the calls. So that's incredibly high implied volatility. It's obviously built around the uncertainty of this earnings result. And ideally, we're going to see a nice vol crush trade come through here. Volatility is going to sink by probably, I would estimate, more than 60, 70, maybe 80%. On this trade by tomorrow after the uncertain earnings come out and they become certain, whether it be good or bad. And so the idea here with this trade is that we have, based on implied volatility with this trade, we do have about I believe it was a $11 or $12 implied move. The options are implying right now that we're going to see $11 or a $12 move tomorrow morning as the market opens up after the earnings result is made public. And so the idea with this trade, with this credit strangle is, now I've layered this. I've done one that's a little safer and then one that is with a little less potential return, one that is less safe, it's closer, but more potential profit. If we just look at this one, because that's the big one right there. We sold the 180 calls and we sold the 140 puts. And if we look at that in a risk graph, we can analyze it. You can kind of see the numbers on the trade. Obviously, it's an incredibly high probability of profit trade, 91% probability of profit. And the idea here is, hey, I know that Salesforce right now is about $158 a share. Over the next couple of days, if it can just stay below 180.55 and above 139.45, in other words, if it stays anywhere in that range, we're going to capture $24,000. That's our maximum profit potential on this trade. Obviously, one of the things I like to do with this trade is not hold it all the way until Friday. Wait for the announcement to come out tomorrow morning. Wait for the volatility crush to take place. And ideally be able to capture half of that. If we could take that $24,000 max profit and just bring in $12,000 in one day, that would be a big trade. Now, these are capital intensive trades, right? These trades are very capital intensive. If you look at the margin committed to this trade, it's a $800,000+ trade. So you may say, well, wow, that's a lot of money. Again, 800,000. Just look at percentages, right? 800,000 bringing in $10,000 to $20,000 in profit over a 1 or a 2 day period. whatever amount of money you're trading with, that can potentially annualize out at a nice potential over the weeks and weeks and weeks and months and months and months during a year that we could do that. So we will hold on to this right now. We're sitting again on this CRM trade right at the sort of the mid price there. We're right around 158 right now, down $6 on the day. We will come back here in just a moment after the market closes and the announcement has come out and see what the pop is, whether it's to the upside or the downside, and if it stays within our range. One thing here that I wanted to show you, we're now, it's about noon time, so we're down to about 2 hours. One of the things that sometimes freaks people out about doing these high probability but very leveraged credit strangles is, you're throwing a lot of money at a trade to get that result. It's a lot of money thrown at a trade for a very short period of time to get a high probability result out of it. And because of that, because it's such a lot of money that you're throwing at a trade, such a big trade, so many contracts that we're throwing at it, and so much of a spread between all of those, every single time you put that trade on, right before the announcement comes out, it shows a pretty substantial loss. Just simply for the fact that you got a lot of leverage, you got some wide spreads there, and that's what's reflected right there. We should hopefully, knock on wood, see all of that plus some disappear here this afternoon going into tomorrow's first trading session. Here's what I love about that trade. Look at that $15,000 of theta. Now, my goodness, today's Monday, and we've got 5 days of trading left in the week here with these particular options. They obviously expire on Friday, but $15,000, almost $16,000 a day in theta. So just with the passage of time, assuming that the move is not too big, tomorrow morning we should see a really nice profit in this position. But that's kind of always the case as you put these on. You start off at a big loss when you factor in the commission charges plus all of the spreads. All righty, we are getting close here. 1 minute, a little less than 1 minute till we get a market close. And again, every trade is a little different, but this is kind of indicative of what you should be seeing with a trade like this. You'll notice that getting right up to the market close here, CRM is still basically where it was this morning when we put this trade on. It's still down $6. The price of the stock really, it's obviously, you can see it's bouncing around quite a bit. The price hasn't really changed, but the total gain or loss for the day has really changed. I think we're bouncing around between a $6,000 to $9,000 loss earlier this morning. And as we come into the close here, those spreads, there you go. There's the close, market close. As we come into the spread, as we come into the close, those spreads tighten up, and we've actually now swung to a slight profit. Obviously, what's going to really determine this profit, we've got $24,000 of potential profit sitting in this trade. 13,000 of it tomorrow could all come in just on theta erosion. Again, that's supposing that we fall somewhere tomorrow in between that break-even point, that 139 area, that 180 level. So we should see here, it's probably about 15 minutes after the market here. We are in extended hours trading right now. We'll let that run and look over the next 15 minutes of what happens here in that position. All right, here we go. We are at 2:05 Mountain Standard Time, 5 minutes after the market close. We're starting to get the move in Salesforce. We're popping a little bit to the upside. If we look on the news here, we're still not showing the announcement coming out yet. Looks like it should be any second now, but we are popping to the upside here. It's obviously in anticipation of a good move, up about 2% right now, well within our range. Again, we were looking for something like maybe an $11 move. That might have been an implied move that we were looking at. And we've got a protective leg down at the 140s and the 180s. So again, anything between the 140 level and the 180 level, we come out smelling pretty darn good on this trade. And we'll see if we hold it just for a 1 day period or a 2 day period. So we'll continue to watch this here, see where we end up here in the after hours session. All right, there you go. We didn't have to wait very long. It's 2:07 p.m. right now. So the news just hit. Salesforce's fourth quarter adjusted earnings per share, 70 cents a share, which beats the analyst estimate of 55 cents a share. Sales, 3.6 billion versus the estimated 3.56 billion. So all of the numbers are good, above average, above estimates. And what's the stock doing? It's falling by $5 right now, falling by 3%. This is why you don't gamble. This is why you don't say, hey, this is a company that's doing well. I think the announcement's going to be good. I'm going to go out and buy it. This is why you do more delta neutral type trades like we are showing you right here. Now, we got to wait, obviously, for the Tuesday morning open on this trade. But right now, dropping $6 basically right now, dropping 3-4% on the news. Obviously, it was better than expected, but not what everybody wanted in terms of results. We'll see where it opens up tomorrow morning, but right now, well within our range. Looks like it's moving to the downside versus the upside. So we're going to have those 140 levels in focus tomorrow morning as we open up this trade. But I am very, very excited. I'm very excited to anticipate what could be, just picking up $12, $13, $14, $15,000 profit on that trade. The majority of it tomorrow morning, just off of the volatility crush and theta erosion. So absolutely could be a $15,000 plus trade for tomorrow. We will see tomorrow morning. Okay, here we are. Today obviously is Tuesday morning, the 5th, and we're just a minute and 45 seconds away from the open. And wouldn't you know it, it looks like it's reversed. We were down $6 in the aftermarket after the announcement, up $2 now in the pre-market. So this is the thing with these earnings things. You never know, but this is exactly what we're looking for. You never know, but you're looking for movement. Whether it's up or down, that's all you're looking for is some movement. And so we should see a really, really nice pop on this position here today. If we come in here and look at our CRM positions, did want to show you one thing on these CRMs. So one of the questions that I get a lot is, hey, you're primarily a credit trader, you're selling options, you're collecting premium, you're letting theta work for you to make you the money. Do you ever buy options? And the answer is yes, I do buy options from time to time. It's not a frequent activity, but I do. You notice that right in here, I did buy one of the very short-term call options on CRM. Spent a couple $100 on it to do that. But the key is I will never spend my own money. I do not want to. Buying options is more of a gamble rather than any directional trade. I believe is a gamble. You're betting that something is going to move in a certain direction over a certain time frame. And so while I'm not opposed to doing that, I don't want to do it with my money. And so I took all of the money, or if you remember, on our CRM position, we have about $24,000. There's the opening bell. We have about $25,000 in theta value there. And I'm more than willing to take, $200, $250 of potential profit from our $20,000 to $25,000 of income potential. and go ahead and gamble that. So there you go. There's the opening. That should continue to progress here as the day goes on. But you know what? Up 17 grand for the day right now on that one particular trade. That is not a bad day. That is not a bad day. We've still got, if you look at the thing, we've still got $10,000 of theta inside this trade. So still another $10,000 of profit potential on that trade. Guys, that's a nice trade. That's a nice trade. So there's our CRM trade example for the credit strangle. And man, just it worked out perfectly.